day, but not true. The end result of a 0.5% higher on the Nifty, not reflective of how we started off, nowhere close to how we started off. That choppiness in trade not reflecting right towards the fag end, and that's because of the Nifty Bank. 2% higher on the Nifty Bank, very strong move. Again, the choppiness at the start and thereafter, just look at the surge that we've seen. And what has this done to the Nifty 50? Let's pull up the contributors. The top 3 contributors doing 125 points on the Nifty. The Nifty closed 127 points higher. Large chunk of that coming from just these 3, right? So that's what I'm really trying to suggest. Let's pull up the heat map as well, because it wasn't just that. It was the broader trend which played out as well. We had around 15 advances to 35 declines at around 11:30 or 12 o'clock today, and that has reversed substantially. Double the number of advances, half the number of declines, and that's how it's essentially played out. So it's a positive day. The Nifty mid cap as well as small cap, the broader markets also largely driven by the way the Nifty carried. In fact, they did better, 0.8%, and look at that from the lows. It's done very, very well, both of these indices, and therefore the broader markets outperforming. The advanced decline will reflect the volatility, and thereafter will also show the kind of strong trend in terms of how we've closed up. 3:2 is the kind of ratio in favor of the advances, is how we've played it right towards the end. But otherwise, it was quite a choppy market, and that's reflective here. Let's last off pull out some stocks on the BSE 500, top gainers, top losers, predominantly on the back of earnings. You look at Gillette there, you look at Federal Bank, you'll also look at a couple of other names on the red side, something like a Sapphire, something like a Symphony, all of them responding to numbers. A Maruti down 4%, surprisingly, is on this list. 2 Nifty 50 counters on this list, Maruti and Tata Motors. Again, Maruti on the back of numbers, but that's how the day was.
All right, Harsh, thank you very much for that. Now, Ramdeo Agarwal, chairman and co-founder of Motilal Oswal Group, says wealth creation is not a short-term game. Here's him talking about investment strategies.
Wealth creation is a journey, and it is never a short-term game. It's a very long-term game, and if you're in the game, you sometimes become very lucky. So the guys who are actually making money are the guys who had some base at the time of COVID. So like people like Manish, me, or all the old investors, those who were lucky to be actually allocated in the market in February, March of 2020, they only made maximum money because market moved very rapidly in next 1 year. Now, if you start entering the market at that point of time, you can't be that visionary that you'll be able to put your entire net worth into the market between March 20 and March 21. Not possible. So typically the guys who are entrenched, they only make money.
And India continues to be a growing economy, and it is benefiting the GDP as well. Earlier in conversation with Manish Chokhani, director of Enam Holdings, also shared his views on the current state of the Indian economy.
Look, our economy has grown for the last, 30, 35 years since we started on the reform path. And we are doing easily 11-12% nominal GDP growth. And as we have shifted from the informal to the formal economy, the formal side of the economy has been growing faster. And the more competitive companies, which are then becoming a larger proportion of those markets. And across categories, you find that the top 5 companies tend to take 75% of the profit of each sector. And there are so many sectors in India, like when the US was growing, that you don't have a dearth of investing opportunities. There's also no reason to believe that we won't keep compounding at this pace. And at some point, the inflection point comes because of both demographics as well as greater use of digitization and technology, where you might hope to even accelerate this growth.
And Manish Sonthalia, the CIO of MK Investment Managers, thinks that markets are fighting rising fiscal deficit. Here's his view on consumption problems that are faced in the markets.
Says that FRBM will be followed, which means that the budget deficit or the fiscal deficit needs to come down. I think that is the pain that is getting felt. That the household leverage, which was playing out between 2020 and 2024, the household leverage is no longer available. And the government is in no mood to give largesse, like the Manregas of the world, of fertilizer subsidy, or food subsidy. They are doing what they can, but you'll also have to stick to the FRB. That is the pain what we are seeing today.
And Maruti reported a 17% year-on-year fall in its net profit for the second quarter, whereas revenue remained flat amid a decline in domestic sales volumes and a slowdown in demand. Tushar is joining in now with the takeaways from the con call that the management hosted post the result announcement. Hi, Tushar. Tushar, not great the numbers that are coming in, but also deferred tax lending its hand to this dip in profit that we see?
So yes, essentially Maruti Suzuki's decline in net profit is not the headline number, so to speak, that we have to consider because it came on the back of a deferred tax liability. But what's crucial is the small uptick in revenue, which is about less than about 1% that we have seen. That actually reflects that the company is not essentially selling cars, at least in the second quarter. And that is precisely what Mr. R.C. Bhargava, the chairman of Maruti Suzuki, said in a post-earnings press conference, that there is an industry slowdown in the sub 10 lakh rupee category, and that it threatens to spill over into the higher segments as well. If you don't have buyers in the sub 10 lakh, that may also reduce that may also depress the interest in the upper segments. Mr. Bhargava does not see the industry growing at more than 3 to 4% in the entire of FY25, despite festive retail sales increasing 14% for the company. Maruti also said that it will not outpace the industry's growth in the full fiscal year, while again warning about the festive season, saying it is what it is as far as the festive season is concerned. Essentially, while retail sales have gone up, it's nothing to talk home about. What the market leader is trying to say is that it's not all good for the entire industry at this point of time. While retail sales have gone up, that may ease the inventory burden on the companies, but it's not a rosy picture, so to speak. In the end, where he says no one likes a slowdown, but fluctuations is part of a business cycle, he would like to get out of this particular fluctuation as soon as possible.
Signaling larger slowdown that we've been talking about. Thank you very much for joining us on that. Now, moving on, Adani Enterprises has reported a 6x jump in its consolidated net profit as compared to the previous year. EBITDA also rose 55% to over 3,700 crore rupees, and margin expanded 430 basis points to 16.7%. Now, revenue has also risen 16% to 22,608 crore rupees. The board has also approved raising up to 2,000 crore rupees via bonds. In fact, Adani Ports also reported a strong set of second quarter earnings. Net profit surged nearly 37% to 2,014 crore rupees. 2,413 crore rupees. Revenue rose 6.3% and EBITDA surged 12.6%. The margin saw expansion of 340 basis points to 61.8%.
During H1, PAT grew by 42%, driven by 11% year-on-year growth in ports revenue and 17% year-on-year growth in logistics revenue. We reiterate our FY25 cargo guidance of 460 to 480 million metric tons and are well placed to hit the upper end of our FY25 EBITDA guidance of rupees 18,000 crores. Our cargo volumes grew at 9% year-on-year to 220 million metric ton during H1. Our planned new capacities are on track. We just closed the acquisition of the Gopalpur port and are on track to commission Vizhinjam port in Q3. Our Colombo port is also on track to be commissioned in Q4. As we plan new capacities, we continue to focus on improving throughput and efficiency across existing ports and are confident of hitting our cargo guidance. We also strengthened our marine fleet by acquiring 80% stake in Astro Offshore, adding 26 offshore vessels to our existing fleet of 142 tugs and dredgers. We saw 17% year-on-year revenue growth in our logistics business during H1, while delivering 26% EBITDA margin. We are focused on expanding our logistics footprint at a pan-India level to ensure last-mile connectivity. As part of this initiative, we saw growth across rakes, MMLPs, warehousing, and truck assets, along with an increase in our agri silo footprint. Our warehousing capacity crossed 3 million square feet. During the period, our TEO rail volume, GPWIS volume, and container volume handled at multimodal logistic parks grew by 11%, 20%, and 21% year-on-year respectively. We increased market share driven by new customer acquisitions, new circuits, greater proportion of end-to-end solutions, and efficiency enhancement by digitization. As we pursue a high-growth trajectory, we remain committed to financial discipline. As on 30th September 2024, our net debt to EBITDA stood at 2x. We became the first private infrastructure operator in India to be rated AAA by 4 domestic rating agencies.
Afcon's infrastructure has been fully subscribed on its day 3 of its IPO and saw bids worth 1.05 times the offer. Now, the issue was subscribed 36% on its second day and 10% on day 1. It plans to raise up to 5,430 crore rupees. The infra's company has set a price band of 440 to 463 rupees per share of its for its 3-day IPO, which is a mix of both fresh issue and an offer for sale. Now, the company plans to use the proceeds of the public issue to purchase construction equipment and to fund its long-term working capital needs. And here's a look at another eagerly awaited IPO. Swiggy is set to deliver the price band for its upcoming IPO at 371 to 390 rupees per share. Now, the IPO consists of a fresh issue of 4,499 crore rupees and an offer for sale of 17.5 crore shares. Now, the offer for sale size has also been reduced, with 1 crore lesser shares being offloaded now. This is of course compared to 18.5 crore shares in the earlier versions of the RHP. Now, the company is valued at around 87,299 crore rupees or $10.38 billion, which is also a tad lower than its earlier $11.2 billion target. Now on to an NDTV profit exclusive. The government is moving to protect your data, and rules under Digital Personal Data Protection Act are expected within a week. EdTech startups, social media companies will now need to comply. And Charu is joining in with the details on this. So hi Charu, give us more details of what we are expecting. Obviously, this should put some of our worries to ease at least.
Yeah, so Digital Personal Data Protection Act is something that has been anticipated for a very long time. And even though it got the presidential assent last year, the rules which were required for it to be implemented among people were still pending. Now, there was a lot of conversation about them coming out very soon. And some sources have told NDTV Profit that they could be coming out after a period of 1 week. So what's interesting is that the rules say that they will provide guidelines for companies for managing consent, the consent that we give them, or the consent that is given to access our data or children's data. And this includes edtech startups like Byju's, social media companies and internet firms. All of them will have to comply. All entities which basically take our data in online form will have to comply. Instead of strict rules, these will serve as an overall framework for consent management, and consent for processing children's data will have to be made verifiable. Entities must ensure consenting person about the data of the children is not a minor or a child, and that person in fact is the guardian of the child or the parent of the child. Companies may be asked to use government issued ID cards or tokens for age and consent verification of children, and this will be the kind of system where eventually for future use, companies will themselves be able to sort of make such identifications and verifications and these tokens. But firstly, they might use government issued IDs or tokens. And all the companies that are processing data online, as I said earlier, will fall under these rules.
All right, Charu, thank you very much for joining us with those details. Now, in fact, as Diwali celebrations begin with Dhanteras today, gold prices are surging to new highs and festivities are continuing to drive demand despite global uncertainty-led price rise. We, in fact, decided to hit the street to get a first-hand experience of how people are buying gold and silver today despite the continuous rise in rates of these precious metals. Subhana Sheikh reports.
It's Dhanteras today, which is considered to be one of the most auspicious days in the Hindu calendar. It's gold buying festival, but our shoppers out and about, we're here to find out at PN Gadgil Jewellery Store, where sentiment seems to be quite upbeat. The jewelers here are saying that sentiment remains strong and they're seeing good purchases of gold. But despite the rise in gold prices, ticket sizes of these gold purchases have actually come down. Now, this is because gold has actually reached a near all-time high of over 80,000 rupees per 10 grams. Now, this was largely because of geopolitical conflicts happening in the Middle East. Now, gold has actually surged nearly 30% so far in 2024. But PN Gadgil Jewellery Store actually expects their sales target to increase from last year in 2024. In a nutshell, festive demand seems to be quite strong in 2024 as compared to 2023.
Footfalls are quite good. From last 5 to 6 days, the sales are quite pick up. We got much better bookings, orders also. And from morning, you are seeing this crowd. It's quite good.
Well, Prime Minister Modi will launch development projects worth nearly 12,850 crore rupees today. He will also extend the Ayushman Bharat scheme to all senior citizens aged 70 years and above. Now, these projects are unveiled for the health sector push on the occasion of the birth anniversary of Dhanvantari, who is considered to be the god of medicine. As at a separate event, he will also distribute more than 51,000 appointment letters to the youth as part of his government's Rozgar Mela. Well, more than 150 people were injured, with 10 in critical condition in a fireworks accident in Kerala's Kasaragod. Now, the accident took place during a festival celebration at the Virarkavu temple. The injured have been admitted to various hospitals. A case has been registered against 8 temple committee members under non-bailable sections for bursting firecrackers without permission. Well, passenger vehicle sales may be on an uptick, but inflation has come down hard on pockets with a steep rise in commodity prices. In fact, NDTV Profits Yash Tiwari did a ground check on the Vashi APMC market to see how masses are reacting to price rise and has it played spoil sport on their Diwali plans.
Always it's hard, but ahead of the festive season, they make an even bigger punch. This year, the impact is even more amplified because of the recent hikes on import duties on essential goods such as edible oils. So what else is making our Diwali more expensive? Let's find out at the Vashi APMC market.
दिवाली की सेल्स अच्छी है। लास्ट ईयर से अगर कंपेयर करेंगे तो थोड़ी सी 20-25% कम है। थोड़े से आइटम सब महंगे हो गए। एक आध 2 आइटम ड्राई फ्रूट्स के पकड़ेंगे, दाल चावल वगैरह जो भी किराना पल्सीज वगैरह जो भी आइटम्स है खाने पीने के, तो वो आइटम्स थोड़े से महंगे होने की वजह से प्लस बाकी सब फैक्टर्स भी अफेक्ट करते हैं।
मार्केट एक्चुअली क्या है ना, पहले से बहुत कम है, रेट्स बढ़ गए हैं। काजू का किराया बहुत कम हो गया, 40% किराया नहीं हुआ है, और वॉलनट चिली का जो है वो भी कम हुआ। देखो ना मार्केट का फ्लो देखो ना, लोग कम है, इम्पोर्ट ड्यूटी भी बढ़ा दिया है और किराया भी कम हुआ है। इतना वो बोलते हैं ना बम्पर जी दिवाली, ऐसा नहीं है। ओके, अच्छा है।
ये साल की कोरोना के बाद वो दूसरा दिवाली है, लेकिन वो इतना महंगा हो गया, हम लोग के बजट में भी जमता नहीं है। क्यों इतना महंगाई करके वो गरीब लोग कैसा दिवाली मनाएगा?
The prices of the edible oil has shooted up like anything. There is nothing, no oil lesser than 150-170 rupees a liter, and it is pinching a common man's pocket. The budget has gone for a toss. 10,000 में आप monthly rationing ले ही नहीं पाते हो for a family of 4. You have to spend at least 20-25,000 to live a sustainable life, to normal purchase of grocery and everything. Every price of every commodity has almost doubled, and the salaries have not increased to that extent.
बीच वाले दिल से ये दिवाली महंगी है, 100-150 रुपए पर केजी के पीछे जास्ती लगा है. ओवरऑल सब महंगा, तेल हुआ, चावल है, दाल है, सब घी सब महंगा हो गया.
What we saw here today is that the common man is managing every rupee to manage his budget ahead of the festive season. With camera person Vijay Sartape, this is Yash Tiwari for NDTV Profit.
Well, Apple, in fact, has witnessed a substantial increase in its iPhone exports from India, which indicates a strategic shift from China. The exports saw a 33% rise in the last 6 months until September. The US tech giant exported gadgets worth nearly 50,448 crore rupees, which were manufactured in India. This is a significant leap from the previous year. This puts Apple on course to surpass its estimated 48 crore rupees export target for 2024. Well, it is Diwali time and online and offline shopping is gaining momentum. How is the IT city catering to its festive needs? Are e-commerce platforms overtaking offline shopping centers? Pratibha Raman goes festive shopping to track trends.
Being here and, being this environment, that gives me that vibe. Probably like clothing. So I prefer to just come and check it out by myself instead of, getting it and then sending it back. It's too much of hassle.
See, festivals in India, definitely a lot of people have the time, they make the time. Women want to wear the best and they don't want to repeat their dresses. And now men are also coming into the same category. What they've worn for one ethnic function or any ethnic day or anything particular, they don't want to repeat.
As the Festival of Lights inches closer, shopping destinations in Bengaluru come alive. But are they gradually getting eaten up by online festivals and deals?
Gen Z, which has become a very, very large shopping cohort in India, is continuing to be very, very active. And we also have a curated platform for them within our app called Spoil. So we have video-led deals, live commerce deals called Paisa Vasool, which really did well for us. We also have time deals where people come in on the app at different times and they can expect, variety of deals which can pop up at that time.
Every year, be it the Big Billion or the Great Indian Festival, the delivery boys are always on the run. That apart, 10-minute deliveries make online shopping more sought after. And this is not just a phenomenon restricted to metropolitan cities.
टाइम भी बच रहा है उनका, पैसा भी बच रहा है, तो ऑन टाइम हमको डिलीवरी भी घर पे मिल रहा है. तो वो सोच के कस्टमर का है आज जो पूरा जो ऑनलाइन शॉपिंग जो है ना, ये वेरी मच इम्पोर्टेंट हो गया कस्टमर. किधर भी जाने का नहीं, आप बारिश शुरू हो गया तो बारिश में आपको किधर भी जाने का नहीं, आप घर पे बैठ के खाना है, आप फूड बुक कर लीजिए, कुछ भी चाहिए आपको कुछ भी बुक कर लीजिए.
Bengaluru's shopping streets see 2x footfall during festivals. But reports say 82% of internet users shop during Diwali. Sales for the first week of the festive season registered on various e-commerce platforms stand at 54,500 crore rupees. Around 1 lakh seasonal gig workers hired by Flipkart, Amazon for festival period across the country. Extra fulfillment centers to cater to storage space for seller inventory. According to the Neo Growth Study report, top segments impacted by e-commerce platforms are consumer electronics, food and beverage, fashion and lifestyle. 50% of surveyed individuals are loyal to their local stores. To combat the onslaught of online deals, offline sellers look at lucky draws, cashbacks and coupons to attract retail customers.
Well, that's all we have time for on this edition of Profit 360. Thank you very much for joining in.